Every time you get paid, the first thing you need to do is kneel down and thank your God that you got paid. I'm serious. I'm not even kidding. Because there are those that are looking for that money that you got, but they do not have it. So please, first thing first, give thanks. Give thanks. Very important. Now, the second thing you should do is that you already have a standby bucket for where this money goes into. I think I've done this video before, but it is very important that we keep talking about these things. There are things that stick from repetition, and this is one of those things. So you need to hear it again in a different way this time, because I've gained more experience. Now, as somebody who has a personal brand and who works a 9 to 5, I have different ways in which I make money, and because of these different ways, I often think that one part of my money should go into one account, and maybe my salary account is just different. So I do not separate a bunch of things, a bunch of monies that come into my hand, because I just feel like I have one account. If you're paying me for influencing, it goes there. Consultation, it goes there. This one, that one, it goes there. Basically, everything goes into one account. But I've come to the understanding that that is one of the reasons why I cannot really structure some things that has to do with my finances. By structure, I mean that I can say that this is the income from my personal business that I used to pay my staffs for my personal brand, and this one is from my 9 to 5 that I used to maybe pay for learning to get better at what I do at my 9 to 5. So coming into this year, I said to myself that there must be a change. I must have different accounts for different income streams that I have, so that I can have plans for them. This business takes care of this business spendings, this other business and does this business spendings. So what do I do now? Once I make money from my personal brand, it enters one account. I make money from my agency called Upstairs HQ, it enters another account. I make money from my salary and my commissions, it enters another account. I make money from the event that I host, maybe when vendors make payments, it enters another account. So this way there are different accounts that caters for whatever we needed to cater for at that time. No mixing of money. And another thing is that I put out a post to get an accountant to do like the basic bookkeeping and the rest of it. Because one thing I've discovered is that if you want a difference in something, you take a different action from what you've been taking. So if you know that you've been making money, but you cannot account for where your money is going to, believe you me, you need a proper structure. And you need to separate monies and maybe further get a professional in that field. But now, what do we do when we now begin to make money in these different accounts? First thing first, depending on what business type, that is how you would allocate the money. If it's a products business, you are not paying yourself 40% from your products business because you incurred cost of buying goods. So what do you need to do? You limit how much you pay yourself, you reduce it, especially if your profit margin is not so much, you reduce it. And then what do you do next? You then put a percentage to reinvest back in the business, and then you have a percentage that goes into money that is like your cash flow for when you need to put money for anything, maybe like assist the business with anything. But that place is just like where you are just readily liquid for the business. Another percentage that goes into maybe your marketing costs. So you see, I'm not mentioning percentages because I want you to look at your business yourself and know what percentage goes into what based on what you spend on. If you have staffs, then another bucket needs to be for money that is used to pay your staff. So you can retain some money in that account. Maybe the money that is used to finance the business to restock can be retained in the account originally. But see, these other monies, this is where you make use of fintech platforms. Piggyvest, Cowrywise, Eyowo, these are different. AfriInvest, Optimus by AfriInvest. These are different platforms that you can begin to have buckets in. My staff salary, that one can be put in a flexible savings plan that you can pull off. You can even decide to lock it for 1 month till the next salary day. Another one is my liquid business savings. That one that just in case something happens, you have money that can save you, but it was generated from your business. Another one might go into any other thing that you know that you're not going to categorize as your spending for the business. That is how you structure for a business that you bought a product and you're selling. Another account in which what you do is to deliver on a service. The money that comes into your hands might be 100% profit. I mean, you did not spend anything extra in delivering that service, so just your brain work. So you are paid an amount that is like 100% for you. For such, you can pay yourself a higher margin of like 40%. Then maybe you have maybe like 20% that goes into a bucket that says running hard to promote my skills, right? Then you have another one that goes into like your savings bucket, saving from this money that you receive. If you're a Christian, please always pay out your tithe first. Your tithe is the first thing that goes out of your account. Then 90% is for you, right? Then you split from those 90%. Please don't hold your tithe. It's very important. This video is not a video for that, but do not hold your tithe if you're a Christian. So that one, you have paid yourself a particular amount. After your tithe, you are paying yourself next. Then after that, you have a bucket for this money goes into reinvesting back in this skill for me to push it out there, to run hard, to get people to see that I do this and they patronize me. You also have a learning budget. Now, let's say you are paid salary. Salary can also be allocated like you are paid money for a skill, because salary is like mostly yours. You do not incur any costs. You're not the owner of the business, so you can also allocate it like the first one, like the second one I talked about, from you making money from a skill. Now the fourth one could be maybe like you run an agency like myself. An agency will definitely have staffs, we'll have extensions that we need to spend money on, we have CRM tools, we have tools that we spend money on to automate different things and to help us make our work easier and smarter. So when we make money, we're looking at a percentage that goes into repaying for all our subscriptions, another one that goes into paying off staff, another one that goes into, okay, I can pay myself. Maybe now we are getting clients, so I should be able to pay myself well, considerably well, or a little bit well. And then another one that goes into a bucket where this is my liquid money for whenever the agency needs money to buffer something. I have a percentage that just goes into a place that helps us to be liquid when we need it. Now, know this. That savings I mentioned should be split into two. However you want to choose to have your save. Maybe you want to save solely from your skill income or from your salary income. It should be split into two. Have a savings that's for the short term, for anything that happens. That's emergency savings. Then have one for the long term. You can call it like your investment savings. So that's the one that you put together to invest, because if you work for 10 years and you're not actively investing, you will only see that 10 years later you are still living paycheck to paycheck. If the next pay does not come in, you are stuck. So you need to still have a percentage that goes into, I put this money together somewhere and invest. But if you earn considerably well, that even one payment, one percentage from your payments into your investment savings can invest in something, immediately you are making that money. Please invest, don't keep it, invest it. I've talked about investments in other videos. If you still want me to talk about some parts of investment that perhaps I've not mentioned, you can tell me in the comments and I'll make an entire video on it. So immediately you get paid, first off, remember, you thank the Lord. Secondly, you do what? You structure, have different accounts for different ways that you make money. Then the third thing that you do, you pay yourself. You need money to live life. If you don't pay yourself, you dip your hands into your business money. So pay yourself. And the fourth is what? Do not keep all the monies together in that same accounts that you receive them. Move them into fintech platforms to organize them very effectively. Then if you can pay an accountant to do more structuring for you, bookkeeping, balancing account and all of that, pay an accountant. It helps you. So if you can make money, if you have made money to that point, pay someone that knows how to do it better to do it. I hope this video has been very, very helpful. And before you go, first off, subscribe. And secondly, watch this video if you're wondering if what you're doing right now is really a business or perhaps it is not. And I will see you next week.